Alright, hello everyone. Welcome to the free video tonight for Simpler Futures. Looking at this is the daily chart of the S&Ps in front of you here. Just kind of want to point out a thing or two. And also kind of make sure you're aware we have a lot of news and speakers and things going on this week. So I'd kind of just urge you to look into that a little bit. You can go to one of a couple of free news sources, one of which is forexfactory.com. That's Forex, Forex Factory. And the other is investing.com under the econ calendar. And you're going to see that there are about 11 Fed speakers this week. You got some ECB speakers, you got Draghi, and there's all kinds of news as well. There's oh goodness, there's everything from some durable goods to, there's crude inventories. There's news about crude this week with the OPEC members meeting in Algiers and whether or not they're going to appear to come to some consensus as to output, and capacity type of issues there. They want it to appear as though they're agreeing. You can watch the price and see how the market is reacting to its belief as to whether or not there's truly any consensus there or not. But in the event of an uptick, there's a couple of levels in crude that you might want to watch out for. That's up around 46, call it 70-ish, and also let me go over crude real quick for you. Just look. There was another level up here. 47.5 is the other level up here. 47.5 is going to put it into this downward sloping trend line, 2 deviations off the current mean average, which is down here at 44, call it 25.30, which was the low on the break from this last visit of the 46.60 area. So so here are the levels. On the way up, you have to be aware of this 46, call it 56 area, 46.50 to 46.60 right in here. That was the previous last 2 highs right there. That could very, very, very easily get in the way. And through there, you're going to be aware of 47.5. 47.5 is going to be 2 standard deviations up off of its current mean average, which was the low of the break. And it'll put it into that downward sloping trend line overhead as well. So those are 2 upper levels to kind of be aware of on the crude there. Let's go back and take a look at the S&Ps and some of the things we were just talking about here, because there's a lot going on here as well. And it started today with a pretty tight range day. We traded about 10 points in range during the regular trading hour session, from about 39 to up to 49. Actually, it went 49 down to 39 is the way the trade went. But not a lot going on here. Not a lot of volatility, and it kind of makes sense. I mean, we're going into the debate tonight, and the only thing I'll say about the debate is I don't know, and nobody knows how the market's going to react to it, but I would anticipate some market reaction to it. Okay, so twofold. One, look for the S&Ps to kind of be dancing around a little bit tonight on that time frame, and then 2, also watch the treasuries. There is still a gap up in the 10-year in the interest rate products there in the 10-year notes. A bit higher, up in the 131.20s, the mid-20s. And so watch for that, see if that level comes in tonight in the treasuries, and then also over here in the S&Ps. Given the fact, I'm going to point something out here for you, given the fact that we had the bid up on Friday that you can see there, no, Thursday, I'm sorry, and then the equal and opposite rejection on Friday. You can see the two candles there side by side. That was one up on Thursday and down on Friday. We call that an equal and opposite. And that is a bearish structure, since it ended with the bearish sentiment. Had it been down first and up on Friday, that would have been a bullish structure. But this is bearish in the fact that it was up Thursday and down Friday. What you look for is a breach of that, and then the continuation on the next day, which is what we got today. Okay. So, one or two things about this. One, you're getting a close below the 21 period exponential moving average. That's bearish. Two, the break came down to only and did not exceed its current mean average down here at about 30, call it 8. I was actually looking for 36 to trade today. 36 was where the market was trading on this day right there, the big up day. On the event, there was news that day. It was on the Fed, I think, that day. Okay, so that's where I was looking for it to kind of come down to today, but it didn't quite. It got close. It got really close. So what does this mean for today, tomorrow, and maybe to get you kind of set up for the week? Well, today it means we had very little range, which is and can be anticipated in front of the event tonight, the debate. For tomorrow, it means this is bearish, and I might look for an uptick back into around 51.52 to be capped for some further price exploration to the downside. And if we get that, what you'll be targeting would be 21.20. Okay, it'd be anywhere from 21.20 to 25, but I'll call it 21.20. That'd be your target. And so that would be for today and tomorrow. And then for the week, it'd be a guess. And anybody that tells you that far out in front of as much news as we have this week, you ought to change the channel, because they're just guessing. Because there are 11 Fed speakers this week. You've got EU and UK news. You got ECB speakers. You got all kinds of news from crude on the Algiers meet to inventories. You got U.S. econ numbers this week. We've got enough in front of us this week to make a difference, and so just be aware of that. We'll take it kind of one day at a time. This is a bit bearish though, which is fine. That's not a problem. Let me clean this up and I'll show you what I mean. This is a bit bearish. That's not a problem. Okay, so even if this does pan out to the downside a little bit, it would be likely, in my estimation, what we were looking for to begin with anyway. Take us down to maybe 2080, 2090, something like that. That's what we were looking for to begin with anyway. That, if you look at this, that would measure almost a perfect 5% correction from the highs, not from the break right here, but from the highs. Okay, that would be about 100 points from 2180 down to 2080. That's 100 points. Every 20 points essentially is 1%. So that'd be about 5% correction. You get that opportunity. Well, I think we'll be looking for some blue light special sale prices down here, and we'll take a shot at the longs from down in this area and bid it back up. Okay. So hopefully that makes sense. We got the what happened today, what we're looking for tomorrow, throughout the week, and then the ultimate kind of macro view there in the event that we do get the break on some of this news that we have this week. But that's all subject to change given the amount of speaking that we have this week. Like I said, 11 different Fed members this week and like 20 different news events. I mean, it's going to be jam-packed week. I think realistically the only day that you get off this week is tomorrow, because starting Wednesday, Thursday, and Friday we've got news between the reports and the speakers. Okay, hope this helps you. Good trading and nice evening. We'll catch you again at the next update. Good night.